Congratulations, friends, and welcome to the Financial Game Special Edition. Today is the 3rd of December in the year 2025. We are truly just about, very nearly at Christmas and the absolute end of this current year. Jose Miguel, welcome. Happy.
Happy Ferret to be back again after a whole year. It's already been
Already 50. How many? 52 now?
51 in this episode. 51 and 52 are what we're working on today. I hope you all had a happy Thanksgiving with your families, all our followers. Thank you for tuning in and following us on our podcast, Juego Financiero Special Edition. And Merry Christmas to those who are seeing us for the last time in 2025. It's important, Ferdinand, not only because these are the last two of the year that we're working on today. We always talk a little about markets, the economy, and financial planning tips for our followers.
Today's content is interesting in two episodes.
In both episodes, and we always touch on something specific about real estate and everything related to it. This morning, Ferdinand, we had data on private payrolls, private employment. It came out a little Devin, it came out negative. The jobs for
It was negative. The estimate was positive 40 and it was negative 32, which is indeed one of the primary and most significant reasons why the prevailing bet in the market is that the Federal Reserve will ultimately cut interest rates by 1/4 of a point.
Next week, when they have their December meeting, the last one of the year.
We'll see what happens.
Yes, the odds right now are for 1/4 point. A 90% chance of a cut, 90-10, 10% chance of no change. But it had been in the low 80s, and with this morning's data, it went up a bit and reached 90. So we should expect that cut next week. Another topic related to the Fed is that yesterday the president said that during the month of January, initially it was mentioned that maybe by the end of this year the next president of the Reserve would be named, but
His name is Kevin Hassett. He's the chief economist on his team. Remember, for Trump, it's not about capability, it's about loyalty. So, who better than the person currently carrying out his political agenda from the White House?
Kevin Hassett, well, there you have it, folks. The Fed is at it again once more, making its prediction.
That is simply, to be honest, I don't know. It's just really like,
We'll be seeing it in our next episodes. Until
so far, we've beaten a lot of money managers out there, in public and on record. Let's see if I get this one right. But I think Kevin Hassett is the person Trump wants to appoint.
but that's coming up soon. It definitely shouldn't be Powell again.
No, Powell. I can tell you there's a 98.9% chance he won't be nominated.
So anyway, that's it in terms of the Fed. In terms of other important data, well, we were talking here before going on camera. The situation with Venezuela is active. Information keeps coming out. Interestingly, the American media doesn't give it much importance. I'm seeing it more in Latin media, in Spanish media.
Don't be fooled by CNN because I watch all the channels, okay, but I tend to go to the middle because I prefer more objectivity and I have a certain degree of empathy with several reporters who I find to be extremely objective and analytical. And I see them more on CNN. So just to be clear, no sponsorship.
CNN does cover it.
CNN, me.
I don't watch it much.
No, I know. No, that's why I'm telling you. But yes, CNN has been keeping an eye on it very closely. In fact, with the news about the Secretary of Defense, mainly the situation with the overkill he committed. But yes, they are keeping an eye on it.
The tension is there. The tension is there. In our country, Puerto Rico, there has been military movement. It's one of the closest points, if not the closest American point to Venezuelan territory. There's the situation that's happened with the barges that, according to the government, are leaving with drugs from Venezuela. They've already been seized, etc. So the attention is definitely there. We'll see what happens. I dare say live and in public that our hearts are with the people there who want that man to leave, and we hope that's what happens. Other news, Farina, as we approach the end of the year, let's get into some planning tips. We're entering the season. If you read about tax loss harvesting, what does it mean? There are many wealth managers, financial planners, financial advisors recommending, talking, and writing about tax loss harvesting. What does it mean? And it's simply that strategy to mitigate taxes, offsetting capital gains with capital losses. It's about stopping some, especially, and one of the main reasons why this is being talked about so much now at the end of 2025 is that we've had some pretty good years in the market, which we've discussed before. It's been almost 3 consecutive years of accumulating gains in portfolios. Depending on how proactive someone is, they may have realized capital gains. In our case, our managed portfolios realize capital gains at the beginning of the year for protection. So now we move on to the other aspect, which is if we can identify positions we want to replace, we pre-select them. If any of those have some kind of capital loss, what you do is sell it and replace it with a position that again meets the criteria, but by replacing it, you offset the gain with the loss, and it's a slightly more proactive tax strategy.
And also regarding the crucial adaptability of taxes, if individuals truly want to set up a comprehensive retirement plan at a self-employed level, it's really quite necessary that they can effectively establish not just the initial deposit, but that they can genuinely create the entire trust itself. Documentation already registered for our people in Puerto Rico with Hacienda, and it has to be done before December 31st. They don't have to contribute. You simply need to have the trust set up, the documentation, and of course the trust initiation, so you can take the deduction. All that paperwork has to be done with an administrator.
That's another thing as well. Today in planning, let's get ready early to open up for tax season. For those people in Puerto Rico who follow us and are used to contributing to their Act 60 funds, for example, as a tax strategy. You're still on time, you can do it. In fact,
Act 60, that's one of the big advantages. You get the deduction without having to create the trust by December 31.
By December 31st.
You can wait until April 15th. And if you have an extension before filing the tax return, with supposedly, all the documentation with the certification, the process, the worksheet, the analysis they keep preparing for you, the calculation, the copy of the decree, submitting it to Suri, and then afterwards,
correct.
Situation country.
So it's recommended to work on it early. That's what we're here for with our advisory services. Don't hesitate to call us. We're here to help anyone in that regard. Those of you who follow us and have accounts managed by us, portfolios managed by us, you'll see that we'll also be carrying out what I mentioned about tax loss harvesting in those positions that we want to replace and adjust.
Let me pose a significant and thought-provoking question to you, one that holds considerable importance, especially since a substantial portion of our valued audience, those who are currently watching us, may not be fully aware of the crucial fact that within our carefully managed accounts, we consistently employ a sophisticated and highly effective system. This system checks if you are going to realize gains and if you already have realized gains from the rebalancing that is done for risk management.
That's right.
Which is basically, I call it the bonsai system. You know that with bonsai, the key to success is that you consistently trim it so that everything grows evenly and becomes stronger. I call portfolio rebalancing the bonsai theory, but that in some cases generates a profit. So, explain to the audience what you all do before December 31st in many of those accounts.
Well, actually, many of the purchases, depending on the year the capital was invested in the model, have lots in the strategies aimed at being as tax efficient as possible. We always look for the lots that have long-term capital gains over short-term capital gains to avoid the higher tax rate of short-term. So the ones with long-term capital gains are prioritized first. And so during this time, the famous tax loss harvesting season, we look for those positions that have a capital loss relative to their cost basis, and then one offsets the other, the well-known offsetting of one with the other.
Okay.
And so the idea is to be as tax smart as possible, to have a portfolio that is tax efficient. That's what we're aiming for. Not everyone does it. So what many people do is carry it over to the next year and decide, or sometimes think, yeah, that's next year's problem, as they say. But if there's an opportunity to do the harvesting, we do it. We do it this year, we take it. In our case, out of a portfolio of 20 positions, as of today, we have 2 to 3 possible losers that have already been identified to be replaced. And that's the reason why we make the move. And
people are going to say, well, no, but I'm a doctor. I have the 4% decree. Take it easy, doctor. The 4% applies to the invoices for which you provide healthcare and bill for medical services. For passive investments, it's 33.
Okay.
So be careful with that. Plus, you have the alternate calculation, which is the second payroll calculation in Puerto Rico. People forget that you always have to pay Hacienda, whichever of the two numbers is higher. So you need to do tax planning. It doesn't matter if you have the 4% decree, you still need to check if you have a portfolio of passive income.
In terms of the market, Ferdinand, they're still performing very well. A bit more volatility this past week, as we discussed in previous episodes, but overall, last week we had a positive weekly chart. If this week is positive as well, it will follow another positive week after having had a red week 2 weeks ago. A bit more volatility, a bit of rotation in the markets, but overall, everything points to the year ending strong. We're already at the time of year when people start talking about the Santa Claus rally to see if there's an extra push at the end of the year. That could come with the Federal Reserve's announcement next week. It could be a trigger for some kind of rally if everything comes out as expected. As more data continues to come in, which is also delayed because of the government shutdown.
That caused delays. People have no idea. You must have heard about Delta already. They reported a $200 million loss due to the shutdown. That cost Shearer a ton of money. You can look it up in the news today. Delta, the shutdown cost them $200 million. And I'm not even talking about American or the other companies. It's going to
have consequences, as we say.
And I think that's why it was checkmate, because of the situation with the possible rate cut that's coming now.
A rate cut. Another thing that's been circulating a lot in the media is the famous Trump accounts for kids. I've already been asked, Felina, I've been friends, people close to me have written to me. They've said, hey, do you know about this? What information is already public? There's already quite a bit of information out there. Basically, it's a hybrid funding instrument between the government and parents for minors. It has some unique features. If the child is born between 2025 and 2028, there will be a contribution from the government, from the president. It's also been made public that the contribution comes from donations. The most famous was Michael Dell with his company funding this project, but yes, he will contribute $1,000 and parents can contribute up to $5,000 per child account for now. It's a good initiative, and it's a good initiative to supplement. For me, it's a supplement to what is college planning and college funding, or those investment accounts like 529s for children, etc. This is an additional complement and an extra opportunity. Deferred growth. I've been asked the question on whether the $5,000 contribution is deductible. No, not for now. Not for now. Yes, the growth
is deferred.
Yes, the growth is deferred. So that's also something to look at. And that's it. In the next episode, I want to get into some data I've received from different people during this time. It's normal that many people give their predictions, what they're looking at for next year, where they want to focus, where they see opportunity, where they see volatility, where they're negative. So I think we can leave that for the next one. Well, lastly, and we'll wrap up with this. How do you see the year at Lionburn Wealth Management in terms of closing accounts? Where are you seeing the portfolio? The portfolio is up 24% year to date as of December. We should close comfortably. I think it's over 20%. The S&P 500 in total is at 17%, so we're maintaining our alpha. There was a month, specifically September and October, when the usual gap closed a bit, and there was more rotation toward sectors not so closely related to technology. But we managed to widen the gap again this past week, so we're happy with that performance. As I mentioned, it's the third consecutive year with a very positive portfolio. For next year, we've already started doing our analysis and looking at what's ahead. There's no doubt we're anticipating a bit more volatility. We looked at it the same way around this time last year, and the year ended up surprising us. It surprised all of us in a positive way.
Absolutely.
We have a lot of analysis to do, many adjustments to make, and we need to continue our mission of delivering a report.
Our number was single digit? Correct. Low single digit. That was our forecast. Positive, but it was low single digit. Not in the way it actually turned out.
We've had an excellent year. Let's dive a little deeper into real estate, which is always of interest to our audience. There's quite a bit of information to analyze, so we'll see you in the next one.